Right, I'm just going to take you around the private art studio Woodbury House. Part of our USP is we're not a forward-facing gallery, however that may change in the future, or probably most likely. What I like about being a private art studio is you just can't walk in, you have to come by appointment only. So many of our collectors, investors and enthusiastic art lovers, when they come here they feel quite special because it is by appointment only, and when they come down here it's quite intimate. Have a glass of wine, they might be having a coffee, they might be watching the Hambleton movie. One of the pieces that catches everybody's attention is in the private office, which is this massive masterpiece from Richard Hambleton. A couple of different names is Rodeo, Horse and Rider, Marlboro Man. There's a couple of different variations of how this is titled. Partly because of how predominant some of the colours are. It's a very, very huge piece, and many of the art critics out there and art experts are saying that in years to come, some of these pieces, these rodeos, are going to be worth north of £2, £3, £4, £5 million in years to come. Who knows? There's no guarantees, but we believe right now that these particular pieces are going to become more sought after as time goes on. And certainly we've seen a lot of people, since the looming and pending recessions happening, are looking to stockpile these particular works. This is a personal favourite of ours. This is owned by a client of ours, and we've sold it 3 times and the piece hasn't left this wall. And it demonstrates that some people buy it as an investment just to, you know, hold on to it for a few years and then sell it on. Some of the other artwork we have in here are limited editions. We have some other smaller rodeos. We have shadow heads. This one over here, which I just quoted in my podcast, is a collaboration with an artist called LA2 or Angel Ortiz. He's from the street art movement as well, from New York. He's in the Shadow Man documentary, someone that we're probably going to be working with in the future. I think this is really important because when clients come down to our studio and before we start talking to them about artworks and what the art market's done, etc., we like to tell them about who we are, because I feel it's important to buy the people behind the brand first and the organisation before you buy the product. So Woodbury House has been in Vogue, we've been in Huffington Post, we've been in Forbes, as I mentioned to you, we've been in GQ, we've been in Wall Street, we've been in Hypebeast, we've been in many different publications around the world, and this kind of validates us as a company first of all, a brand in the art sector, and we've bridged the gap as well a few times, which is clear to see in some of the publications such as this new collections one, where we've bridged the gap between fashion and art, where we've done collaborations with clothing companies like Dark Circle Clothing. We've done this twice with an artist called Scooney and Dark Circle, and also with the Richard Hambleton copyright. Here are some of our flyers to some of the shows that we've done. This is our first ever show that we've done in Dubai in 2015 with a very successful restaurant over there called La Cantina des Bois. I ended up on Dubai Eye, their biggest financial radio station over there, which wasn't planned, and I was completely shitting myself if I was completely honest. I've done some other interviews for some of their local TV networks and channels and things like that. Very cool show, and we done extremely well over there. These are some of the jackets that Dark Circle created from the collaboration that we done with the Richard Hambleton copyright and archive. There were 25 jackets, 5 of them got seeded on influential and credible individuals, and this ended up getting us into a few different publications, but probably the most well-known one was Vogue Italia. In this part of the studio, we call this like the private gallery side. We have a few different artists, Futura, Retna, we have Days. Very interesting thing about Days, he was linked to Hambleton, or is linked to Hambleton. He was Richard Hambleton's tenant, so Richard Hambleton was his landlord. He's very much someone to look out for in the next few years. But most of the work in here is Richard Hambleton original works, and there's a few editions around. This particular edition, called, if you can see through the bubble wrap, Speak No Evil, See No Evil, Hear No Evil. This is acquired by one of our clients after this whole coronavirus thing dies off. hopefully dies off very, very soon. He's moving into a very nice penthouse in London, and this is going to go up in his new apartment. And this is quite common. A lot of our collectors, they buy limited editions as well. This is a run of 25. Part of the reason is because not everybody wants to have a 200, 300, 400,000 pound piece in their house. Number one, the insurance. Number two, how delicate they can be. You know, if you know, a child or you know, you're having a party, someone puts their elbow through it or spills some wine over it, you're going to be banging trouble, and most importantly, it could get stolen. So with limited editions, they're usually a lot more durable. They're not worth as much, but still, you know, evidence does suggest with other artists from the same kind of era as Hambleton that limited editions go up as well. One of my favourite pieces here, which is owned by another one of our clients, is a smaller rodeo from 2016. But what I love about it is the colour, purple. It's quite rare to see like these striking colours from Hambleton. His typical works is black and white or darker colours. So when you get something with the colour like purple in it, this is sure to attract certain collectors who love that kind of work. What I want to show you right now is this is going to be our main focal point in the next few months is of these nightlife pieces. They're from the 80s. This is when he transitioned from the streets of New York, where people were calling it graffiti. Hambleton used to call it public art. He kind of reframed it, and he went from the streets, which he was using as a canvas, to basically paper. And they were folded away in these nightlife boxes, and they haven't been seen for many, many years. We have 22 of them. There are 53 of them out there. So what I want to do is I want to unfold a few of the works that we've got. So basically they all came in these boxes. And if you have a look, there's like a bio, a description of what these nightlife works are by Richard Hambleton. This is number 46 out of 53. They're signed twice. They're signed once on the box and once on the actual booklet. Embroidered, it says the Nightlife by Richard Hambleton. And when you open them up, they are all original and they're all unique, but they're the same style as that one over there. So as you can see, these are pretty cool works, and we're very, very excited to get all these framed and to do the show, which was meant to happen on the 29th of April, so 29 days away from now, but due to this pending looming situation, it's been put on hold. Yeah, we are very excited to see it unfold in the next couple of months. So yeah, it's going to be pretty cool. Hope you've been enjoying this little tour, and stay tuned because there's going to be some more work, some more content coming out, and please give us a contact at Woodbury House. Thank you. Welcome back to the Stephen Sulley study. I'm at my second home, Woodbury House, one of the co-founders of the brand. And I felt that it's quite important for me to do another bit of content on not just Richard Hambleton and the art market and what we're doing as a brand, but also the climate and also you know, how the economy is changing because of the coronavirus and the media. And there's a lot of opinions, there's a lot of so-called facts out there, and I'm not coming on to the podcast or making some content and trying to hold myself out as some kind of financial advisor or some kind of economist or some kind of expert. I'm just going to give you my take on things, and I have the mindset of no matter what happens with economies, no matter what happens with markets, no matter what happens with business or life itself, there's always opportunity to learn, grow, and most importantly, become a success. And I'm seeing more and more people shift out of the conventional areas of investment, and they are going into more collectible areas. And some of the quotes, sound bites, and media references I'm about to share with you is going to support what I'm saying. So let's just start with the coronavirus. This podcast isn't to talk about, the health implications and things. I'm not qualified to do that. I'm not a nutritionist. I'm not a doctor. But I want to talk about kind of how it's having an impact on the economy, and they're talking about an official recession and how it's affecting banks, how it's affecting the mindsets of the central banks around the world, and also large companies, CEOs, etc. So where shall I start? Well, I picked up an article very recently from the Daily Mail. It really kind of hit home the narrative that many of these publications are trying to portray, and whether it's factual or not, whether it's a bit of propaganda or not, the facts are they are promoting it quite aggressively, and they're saying that in the months between April, which we've just started April, today is the 1st of April. I know this podcast is going to come out roughly a week later, but right now as I'm speaking, this is the 1st of April, and they're saying between this month and June, over the next 3 months, we are going to see the UK contract and shrink by 15%. Now, according to some experts out there, I've heard their definition of a recession. It's 2 quarters back to back finishing negatively, so going into retreat, contracting, shrinking, whatever you want to call it, and that classes us as official recession. I've got a quote here from a publication called Fool, which is FOOL, and this is what it says. What is a recession? A recession is a period of economic decline, normally accompanied by an increase of unemployment, a decline in the housing market, and a drop in the stock market. I'm a firm believer that money isn't lost, it's transferred from one place to the other. And the old kind of saying or metaphor or analogy is, if someone walks down the street and they suddenly develop a hole in their pocket and they drop a £20 note, they have lost that money. But the person behind them is going to pick it up, and it's just simply transferred from one person to another. Now, if you imagine markets are like that, they're like people. If it's being lost from one market, it's got to be going somewhere else. If you remember back in 2007, 8 and 9, when we had what was called the subprime mortgage lending recession, or what the media were calling a depression, they were saying that gold at that point was a flight to safety. It was a safe haven. It was a place to park your money. And I was hearing people say it's not about, in these adverse times, about the amount of money you're going to make. It's about the money you're going to save. Every pound saved is like a pound made. Gold was definitely a place where a lot of people were plowing their money into. And I think it got up to about $1,800, maybe $2,000 per troy ounce. I would need to go back and research that, but it was fairly high. And what they were actually saying around about that sort of time is, if everyone tried to claim on their gold bullion bars back then, there wouldn't be enough gold to supply everybody around the world. When there's a lot of panic, people fly into certain products, and I'm here to tell you that right now, if we are facing a recession, this is no different. Every recession is caused by something, and they say a recession happens every 10 to 15 years. I'm a firm believer of that. And I'm not here to talk about conspiracies or what the government wants or what the government doesn't want and everything else. But if we know these things are patterns and history repeats itself, then we as individuals, we should prepare ourselves. They say the definition of stupidity is not making mistakes, because mistakes are inevitable. But if we don't learn from our mistakes, then that is stupidity. And this next recession, if you wasn't prepared last time and you got through it and you got battered and bruised and you got financially hurt, whether that was losing jobs or losing assets or whatever else, this is a great opportunity for you not only to save your money, but actually make some kind of profit in this turbulent time. So I want to reference a couple more of these publications and just kind of my take on certain things. And I want you to go out there and research it for yourself, get expert opinion, Listen to people who've made a lot of money, but people that have gone through recession after recession and see what they've learned. And anyone that's gone bankrupt and bounced back, what can you learn from them? Listen to interviews, pick up books, listen to massive tycoons in the property business, social media sector, and you'll find common ground with a lot of these entrepreneurs. A lot of it is to do with mindset. It's also to do with education, and then the last thing is about application. The next one, so even the Bank of England, they've adjusted. The Bank of England have dropped interest rates down again. We've experienced historic lows of interest rates for many years now. It's been below 1% for some time, and this has been battering savers because inflation is usually peaking above that. It means that the erodence of money, the inflation rate is burning the money away, the value of the pound, and just leaving it in the bank, even though people's minds is if it's in the bank then it's safe. It depends how you look at it. If you're calling your money just because it's sitting there safe, I believe that if the money's just sitting there and it's not beating the rate of inflation, you're actually losing money. And admittedly, your money might not be going down on your statements, but the value of it won't be able to buy the same amount of goods today than it could do in the next 5 or 10 years, if that makes sense to you. The Bank of England also said that they're going to start quantitative easing, which is printing more money. Over £200 billion is going to be printed. Again, this devalues the currency, it weakens the currency, and again, this is another reason why you should think about protecting money and more importantly, putting it into assets which are going to yield you a steady, healthy return. So you might be thinking, why am I saying this all to you? And I'm going to paraphrase some of this stuff. I'm going to read you some quotes. I'm going to read you some stuff I've written down. This podcast isn't meant to be perfect. I'm a real guy. I'm really experiencing this situation like everybody else, and I want to just come across to you that I'm doing everything I can to research markets, learn it for myself, and if I can share any of this information that's going to help you and your family, then that's my goal. And this was a paragraph taken from The Guardian. As stock markets in Europe and the US are braced for the biggest fall since 2008 financial crisis after the trading week began with panic selling aimed the double threat of a coronavirus-driven global recession. It is completely understandable that there are some levels of uncertainty during this difficult time. However, one thing that has been proven is the art market or the art world is not affected by the instability of the stock market. So basically with that sentence there, they're non-correlated. You may hear a lot of people say universal quantifiers such as everything is crashing, everything is losing, everybody's losing their money, everybody's losing their jobs, and it's far from that. In actual fact, and this is a bit of a common fact or bit of knowledge, but the news has a habit, newspapers, radio stations, TV, and even some of the social media channels which are attached to these massive organisations have a habit of reporting not good news, but bad news. Why do you think they report the amount of deaths or the amount of people catching the so-called coronavirus opposed to the amount of people recovering? And it's the same thing with stock markets. They won't tell you about certain stocks that are appreciating. They're going to tell you about the ones which are losing. And again, I'm not here to get into propaganda, but some people will deem this as a bit of scaremongering, okay? But if you can look past the noise and research for yourself, you will find that some markets, including the art market, is non-correlated, and a lot of it is very, very stable, which I'll get onto in a minute. So here are some facts. Why would art be faring better than the stocks right now, as in the stock market? One possibility might be that those who have been pulling out the stock market are looking for new investment opportunities. And this was a quote from Forbes. Now, generally speaking, Forbes are pretty legit and they are pretty renowned in the financial markets of giving very healthy and good information. In actual fact, this company, Woodbury House, has been featured in Forbes. We've done a fantastic show over in Mexico City a few years ago with the likes of Richard Hambleton, Andy Warhol, Barry McGee, we had Sage Vaughan, Retners, we had a bunch of different contemporary street art, and it was absolutely fantastic, and Forbes chose to do a write-up of us, which was great. And I generally feel when they make publications and write-ups and articles, they're pretty fairly accurate and pretty spot on. Stock market corrections, volatility and other financial fluctuations are non-existent in the art world. This is seen as one of the biggest advantages to investing into art. And that quote is from Money Crasher. That having said, I do not conclude that the art market has not taken the same beating as the stock market from Forbes. Here are some key facts, and these are attached to different publications who are quoting this. This isn't me quoting it. This isn't Woodbury House quoting it. This is simply us regurgitating some of the opinions, facts or comments made by what the public are saying are the experts. You should avoid parting with any of your artworks at the onset of a recession, particularly if they are in the possession, or if you're in the possession of blue chip artworks by artists in their collection. This is from Artsy. And what they're saying here is if you own the likes of Jean-Michel Basquiat, Keith Haring, Andy Warhol, Picasso, Van Gogh, or maybe the likes of Richard Hambleton, or any of the kind of elites out there, you know, you've got other artists which are very, very well known, such as Jeff Koons, Damien Hirst, Banksy, of course, Ramo Z. I mean, you know, the list is kind of fairly endless. These are typically the ones that they would deem as blue chip artists, and therefore maybe selling them off in a recession is not really a good idea. During a recession, always collect. Buy works, if possible, where you can. So often, some of your greatest profits will come from the sale of the inventory works that you collect today. I've heard this kind of thing before, which again, this is a quote from Artsy, very respected art platform. And I've heard this kind of thing in the property sector. They say more self-made, successful business entrepreneurs, millionaires, maybe even billionaires are produced from a recession. You have to understand, if one door closes, another one is about to open, and it's your duty for you and your family to discover where that next door is going to be. One person's loss is another person's gain, and whether you feel that is kind of raw and blunt, it simply is the truth. And rather than kind of complain or get slightly, let's say, confused or angry about the matter, get power. And the way you're going to get power is just by getting yourself educated and just taking some kind of action. And I'm a firm believer of the people that take no action, they're the people that end up getting their fingers burnt eventually. Now, of course, I'm not saying go into any financial market or investment vehicle without doing your research and getting opinions and, you know, taking your time. Not saying that. But what I am saying, moving into a market that has got clear track record, clear credibility, dealing with a company that is validated in that sector, I feel these are the things that you need to find out first. And then once you feel comfortable with that, then it might be an idea to start moving into these areas. Okay, so the art market has produced plus of 1,400% turnover growth since the year 2000. And this was a quote said by Art Price. Choose to invest into art, in particularly the contemporary art market, because this has grown by 1,800% in 19 years. The price index increased by 22%. And this is again another quote by Art Price. Worldwide auction sales in 2018 were $19.4 billion compared to $3.2 billion in 1989. That's an increase of more than 500%. Today, the art market size, including gallery and online sales, is estimated to be at least $60 billion. And that's a quote from Rob, but with a double B, so ROBB report that is the publication. Purchasing art is a type of alternative investment strategy. For the savvy art buyer, it can be a massively profitable venture, as demonstrated by Art Price in its list of best performing art stocks and sales in 2017. This is another quote by Forbes in their recent publication. Investing into art is becoming more popular. People continue to look for ways to minimize downside risk. And this is another quote by Investment U, which is another publication. So even though I'm just reading these out, I purposely got our team here to look at different publications, different places, to find out their opinions and to find case studies and data to support the fact that more and more people are going into the art market, more and more people are pigeonholing to the contemporary, maybe street art sector, and there are clear signs that auctions are going up and up and up every single year despite recessions. This might support, again, part of the money is leaving the stock market, leaving banking, leaving ISAs, leaving bonds, and is transferring over to things such as art. Maybe not just art, it might be other stuff like classic cars, it could be fine wine, it could be all kinds of different things. But there is certainly a significant figure going into this market, and that should warrant you to look into it a little bit further. There's many different more sound bites I can share with you, which I'm going to publicise on the visual version on YouTube and also on the Woodbury House portal and on our social media, etc. But let me just turn to the kind of this next point. Art is such a wide market, so what market inside the art sector should people be looking at? The answer to that is every single sector in the art market offers different characteristics and different trends. The one that we are more au fait with and familiar with, and the one that we've immersed ourselves into for the last 6 years and beyond, is the contemporary street art movement. So let me talk to you about contemporary art. The last 17 years have shown that a well-diverse portfolio of contemporary artworks generate on average an annual yield of 7.6% and upwards, sustainably higher than the art market as a whole. And this is another quote by Art Price. The contemporary art market has grown by 1,800% in 19 years. And as I quoted before, this is increased by 22%. A major trend of the 90s was the ascendance of contemporary art, which became the art market's biggest growth area. This is according to Britannica. So the contemporary art market is a huge market, but the area we focus on is the street art sector within the contemporary art kind of urban art genre. So the question is, what is street art and where did it originate from? Now, most people know the infamous artist or the elusive artist called Banksy. Back end of last year, there was a piece that went for almost £10 million. And this demonstrates that even artists which are alive and kicking, their market can grow astronomically, and there can be some monstrous results in auctions. And had an investor collector, a fanatic of street art, or Banksy purchased that piece many years ago, they would be making a huge fortune back. But by no stretch of imagination did he start or pioneer the sector of contemporary street art. This predominantly happened at the back end of the 70s and certainly in the 80s, and there was a few key artists that began to stir up and to blaze their own trail within the street art sector. There were the likes of Jean-Michel Basquiat, Keith Haring, of course Richard Hambleton, there's Ramosi, there's Futura, there's Days, there's Crash, there is Out Diaz, there's many different artists that mostly predominantly came from America and also from New York. There's of course other ones, but these are the ones that kind of paved the way for many other artists. For example, Cause, who is known as a street artist, he's not limited to just street art. He actually converts his art onto toys, onto clothing, and also onto canvas as well. And we have seen the bridge between street art, canvas, which people collect, but then onto merchandise and collectibles. So it's a vast and it's quite a growing market. It kind of dovetails into other things. Many rappers, many singers, many songwriters, they reference many of the street artists because they gave them a lot of inspiration and definitely motivation to go out there and to inspire their creative works. I want to quote you something from Mark Price again. In 2017, the contemporary art market generated a stunning record with its first ever result over $100 million for one piece of artwork. Jean-Michel Basquiat's artwork sold for $110.5 million, breaking the previous record in 2013 by double the amount. For one piece of artwork, if you can imagine right now today, there are collectors, investors out there that are willing to pay over $100 million for one piece of art. And this same piece of art back in 1984 was auctioned off for roughly $19,000. Now, if I were to tell you, if we had the power to turn back the hands of time in hindsight and say, let's go back to that point, let's buy a piece in auction, which is going to be going under the hammer at $19,000, and you're going to sell it in 2017 for a record staggering amount of money of 110.5 million, what would you honestly say? Now, I know my response. I would think you're kind of crazy, kind of mad, but that's exactly what happened. And again, just like these recessions, just like markets going up and going down, history will repeat itself. And predecessors have shown over 10, 15, 20 years, this cycle happens. And this is why there's clear evidence and logic does suggest that Richard Hambleton is definitely going to be following suit. This brings me on to my next point, case studies. I want to move forward as to why you should be investing, particularly if you have the money and if you have the confidence in the market, in Richard Hambleton specifically. On this visual version, not on the podcast, I'm going to show you some graphs, I'm going to show you some flow charts almost, and I want to demonstrate to you that within the first 3 to 5 years of the artist passing away from Richard Hambleton, from Jean-Michel Basquiat, from Keith Haring, you can see the art prices jump. This is because they say the best career move an artist can make is when they pop their clogs and they sadly pass away. Happened to Picasso, it happened to Andy Warhol, it happened to many of the artists out there. There are artists today such as, Damien Hirst, Jeff Koons, Banksy and many others that their market is producing some fantastic results and these artists are still live and kicking today. But the facts are urgency kicks in to certain collectors, investors when they know the artist is no longer physically able to paint or to produce their artwork because they're no longer around because they've died. So let's look at the case studies. Richard Hambleton, his death was sadly in 2017, the 29th of the 10th, 2017. Jean-Michel Basquiat died in 1988 on the 12th of the 8th. Keith Haring, he sadly passed away on the 16th of the 2nd, 1990. 3 years after Richard Hambleton's death, we bring us to today, 2020. 5 years after Basquiat's death in 1993, so basically 5 years after brought us to 1993, and 5 years after Keith Haring's death, it brought us to 1995. So I'm going to just read you some quotes here. Let's look at the artists passing in more detail and how much artworks sold for 5 years after their death. As you well may know, as Basquiat, Haring and Hambleton were some of the key artists in the 80s. However, As much as a fixture of New York's 80s underground art scene as Jean-Michel Basquiat and Keith Haring, Hambleton was much less concerned or interested in the celebrity limelight and wasn't really interested in cooperating with the art world. This is why he has been also dubbed as not just the godfather of street art, but people call him a true artist, because he wasn't really in it for the money or the fame or the glory. He was in it for the art. Whereas some may say, and some credible people in the art market have said that, well, you know, Jean-Michel Basquiat, fantastic artist, Keith Haring, incredible artist, but they conformed a lot more and they kind of may have sold themselves out. Not my words, it's just the words that have been voiced a few times. They traded amongst themselves. Basquiat and Hambleton used to collect each other's work and trade. But Richard Hambleton, as I mentioned, never sold himself out, like many say Haring and also Basquiat did. And this is a quote from ID Vice. Private sellers report even bigger numbers, with one collector noting that they've sold Hambleton's work between $500,000 and $1 million. Indeed, the gap between Hambleton's auction results and private market figures remain sustainable, although the two figures are getting closer. I think I'm pronouncing this lady's name right, but it's Durham believes that the gap will close very soon. And her quote is this: I think 3 to 5 years maximum, she believes the gap will close, because what's happening is the collections of people that have been a part of Richard's world, be it collectors or dealers or someone who has just bought a piece from him, they're all seeing the renewed interest in his work. This is another quote by ArtNet. In 2019, the sale of opening, inverted commas, 1983, which beat its low estimate of €7,000, but over 20 times at the Bellati in Milan, I think I pronounced that right, I'm not too sure, closed at €150,000. This is not an isolated event either. This is a quote from UK Investor. So even though my reading isn't perfect and I'm not the strongest reader and writer out there, I'm just trying to demonstrate that there are a lot of quotes and suggestions from credible individuals and credible sources and organisations and institutes to suggest that Basquiat's market, Keith Haring's market, they boomed after 5 years. But Hambleton, they're saying in this 5 year period that it's actually growing stronger. The momentum is growing and it's becoming stronger and stronger and stronger. I want to get to this next part. As you can see from the next 3 graphs, Jean-Michel Basquiat's paintings are selling for an average of $58,000 5 years after his passing. After 5 years of the passing of the artist Keith Haring, his paintings were selling roughly at $9,000. Now I can tell you this, some of his artworks are going for tens of millions of dollars. Again, 1995, if you bought a piece at $9,000, they're saying here, and you were to sell it for 10 million upwards, you would be a very, very happy individual. Lastly, a year after Hambleton's passing, the price increase skyrocketed as the average of artwork sold was approximately $101,000 in 2018. Now, admittedly, this number has only increased as one Hambleton landscape from 1985, I believe, which is a blue, beautiful wave painting, sold for over $500,000 in the auction house Phillips. That happened in 2019, only just last year. These are kind of the data that you would need to feel confident, to look at things not emotionally but logically, and of course when you see these numbers it's obviously going to get you excited, but you should always back up any kind of emotional purchase, certainly when it comes down to investing and parting with a lot of money, with pure facts and figures. I personally think that's important. So what I've got in front of me is various different artworks. Some of them, many of them, are actually limited editions. So these are not even original artworks. These are limited editions signed off either by the copyright or the archive or the estate of the artist. And I'll read you this one. The title of it is Back of the Neck. The original was produced in 1983 by Jean-Michel Basquiat. It's titled and dated. The medium, so basically what it's made out of, is silk screen with hand colouring paper. It has the size on it. This work is numbered 12 from an edition run of 24 plus 3 artist proofs. This happened in Christie's auction house in 2017. The estimate of this auction was going to be between £220,000 and £280,000. The price realised, so what it actually went for, what it got sold for, was way above that. £452,000. £452,000, approaching £500,000 for a limited edition from Jean-Michel Basquiat. This demonstrates that not only originals, but also limited editions from very sought after and blue chip artists are definitely investment. They have to be, because this demonstrates that. This is not a one-off either. Pieces that have gone under the hammer and they've far exceeded the estimates. Jean-Michel Basquiat, it's called Saxophone. This was sold in 1993 at Christie's. The estimate was between £40,000 and £50,000. This realised a result of £58,700, nearly £60,000. This is an original artwork. If we now look at some of the auctions from Keith Haring, there is a piece, acrylic on canvas, titled, untitled, and it was made in 1984. It is titled and dated. It's got the size. And this in Christie's this year, 2020, the estimate was between $200,000 and $300,000. This sold for $435,000. And finishing off with Keith Haring, there are multiple different other auctions over the last few years where I mentioned before some of his works have exceeded tens of millions of dollars. But if we look at what most people are saying is one of the most sought after, undervalued artists in recent years, which is Richard Hambleton, the godfather of street art, and that was dubbed by the New York Times. There's a piece here that stands out. It's a bit of a collaboration between two artists. It's Richard Hambleton and also another artist who's called LA2. He's actually featured in the Richard Hambleton documentary called The Shadow Man, which is a fantastic watch. I believe it's on Amazon Prime. Or if you want to contact us at Woodbury House, we can send you over the trailer and also a copy of the movie. Or if you want to come down to the studio, we'll be happy to play it for you. LA2 and Richard Hambleton designed a shadow head together. This had an estimate of only $800 to $1,500 back in 2012, and this actually fetched $1,500. The reason why I tell you this, because that is a very, very low result, is because these same heads today, if you were to look on the market, are fetching between £40,000-50,000. I'll read you one which is more recent. In 2019, from Doyle, another auction house, a shadow head by Richard Hambleton. Year 2016, it's an acrylic on canvas. This sold for $50,000 and the estimate was around about $40,000. Again, Richard Hambleton has been, in the last few years, completely smashing and obliterating auctions. Let me read you some very recent ones and some of the big hitting auction results. So these are the best auction results of 2019 by Richard Hambleton. A 1982 acrylic on canvas piece, which was estimated to go for $80,000, sold for $200,000 at Christie's in 2019. Battle Scene, 1982, acrylic on canvas. This had an estimate of $120,000. It sold for $268,000. This was in Sotheby's in 2019. We had another piece that I was personally present at. It was in London. It was at Sotheby's. One of my clients was actually bidding on it. We sadly missed out on it. It was a 1982 Stanley Shadow Man. This had an estimate of £120,000. This actually fetched a staggering £312,000 under the hammer. And I mean, I can talk to you about many other of these larger auctions, but the one that is kind of breathtaking and really exciting to see is the 1985 acrylic on canvas wave piece that sold for over 500,000 at Phillips. That was in 2019. I'm going to just talk to you about a few of these case studies and what pieces went for and what they historically and what they've gone for in recent times. This is Hambleton again. I just mentioned a piece last year, which was a 1982 original work by Hambleton. October 2019 in Sotheby's went for 312,000. Now this is not the same piece which I'm about to refer, but it's the same size from Richard Hambleton, same quality, same year most importantly. This in October 2006 had a fairly low estimate of about $2,000 and it sold for $3,000 back then. So if you could imagine, this kind of was, even though they look slightly different, but they're kind of the same. They're from, some would say, from the same run. If you were to bought a piece back in 2006 for $3,000 and in 2019 you sold it for $312,000, you would be a fairly happy investor. This has a price increase of $309,000 in 13 years. This is evidently a very similar artwork. This is what we've got noted down. This next piece I'm about to share with you, this has a price increase of $216,000 in 12 years. So in 12 years, this particular investor made over $200,000. This is an untitled Richard Hambleton 1983 piece that in 2007 sold for $8,500. In September 2019 sold for $225,000. This next piece, and this is the final piece I'm going to share with you, this has a price increase over 12 years of over $300,000. In 2007, this piece from 1999 sold for $1,900, so nearly $2,000. In 2019 in March, so basically a year ago, it sold for $312,000. Reason why I wanted to do this podcast, this YouTube, is to really get the message out there that, number one, a recession is pending, is looming, and is probably inevitable. You owe it to yourself, you owe it to your future, you owe it to your goals, you owe it to your vision for you and your family to learn about recessions and learn that there are opportunities in recessions. Despite what people and the media are telling you, there are always opportunities to grow and adapt and to become a success. Now, whether that is investing into Richard Hambleton artworks or art itself or different markets, but even in your business, surely there's opportunities where you can kind of reposition your brand and take full advantage of the change. The second point, recessions come and go, and they come in cycles every 10 to 15 years according to certain sources. Markets will peak and they will drop, and it's the job of the investor to find where that money is going and find where that trend is transitioning to. And I feel if you can collect data, if you can do a lot of reading, research, and you can get really good expert opinions or suggestions, I feel you can make an informative decision. You can make a calculated decision, which is going to minimize your risk. Right now, we are seeing a massive trend. Woodbury House's success, most of the success has been built off the wave and the energy and the excitement and enthusiasm from the Richard Hambleton artworks and his story and his legacy and the people inside his market, and also much wider the street art movement. It's such an exciting area to be in, and we feel that the trend, the amount of money being made, the auctions, the compound effect of more and more new investors and collectors coming in is only going to grow stronger over the next few weeks, next few months, next few years. Despite a recession or not, and this coronavirus or not, people are going to continue to collect and still build their portfolios and buy for the sheer love of it, or to make money, or just to park their money to protect it. I would say educate yourself. I would say watch the Shadow Man documentary. I would say once we're in this kind of semi-lockdown phase, come down to Woodbury House, meet the team, watch the full movie, read the brochure from the Richard Hambleton Copyright or Art Archive, learn a bit more about his market, And I feel once you start to really realize that there are clear case studies to show that this market is growing year in, year out, I feel it will give you the confidence to take the next step and to at least collect some of his works. Not all his works are at 300, 400, 500,000 pounds or dollars. There are, of course, lower entry point pieces. I'll give you one example, and this is something that I personally experienced. When we first started selling his artworks over 6 years ago, we were selling some of his shadow heads at £5,000. Now some of these same works are selling on the secondary market at 40, 50,000 pound upwards, and there is no sign of this slowing down. I typically think that if someone is looking to diversify and they like the sound of street art and contemporary art, and more importantly Richard Hambleton, and you're thinking and wanting to invest into this market, roughly 20, 25,000 pound, 30,000 pound would be a good place to start. If you have more money and you are looking to get involved a little bit more seriously, and you are a sophisticated investor, you're a high net worth, you're someone that has a growing portfolio in art and you really want to jump in head first, 100, 200,000 pounds, we commonly get investors looking to put that kind of money into his artwork. And I also think at that kind of level, there are plenty of very solid and strong pieces and quality pieces out there that I personally believe you're going to do very well on. And clearly the evidence suggests that if you park your money in Hambleton original artworks and some of his limited editions, but specifically original artwork, in the next 5 or 10 years, you're expected to do very, very well. I hope I've shed some light on a little bit what's going on out there. This is not the perfect podcast, I know. This is not the perfect episode I've ever done, but I'm trying to collect all this data. There's so much information out there. Things are moving very, very quickly. There's a lot of panic, a lot of uncertainty. But putting it all to one side and just remaining calm, and remember, life is not rehearsal. You've got one shot at this, and this is about, doing what you can with the resources you've got. Look at certain markets. This is the market that we are a part of and we've got a lot of experience in. I feel there's a lot of opportunity for many of you to take advantage of. Please get in contact, hit me up on social media, contact Woodbury House. You can come down to the studio, you can contact us via email. We're going to do plenty of shows. We've got a nightlife show coming up, which is going to be very exciting. We have a photographer coming over called Frank Palela, who documented the work of Hambleton. Yeah, it's going to be a very exciting year for Woodbury House, for the art market, and I feel Richard Hambleton is really going to boom. Guys, be happy, never content, and thank you for subscribing and listening.